Nick Jurgens, managing partner with Madison Commercial Properties. Thanks for coming on the Business Brief.
Thank you, Ryan. Thank you.
Now, Nick, the commercial real estate market has been greatly disrupted by this pandemic. More and more people are working remote, working from home, as both employers and workers realize their productivity is relatively resilient. You all have just released your fourth quarter market report for Colorado. What are you seeing and what do you expect ahead in 2021?
Well, the sentiment for 2021 is positive, Ryan. Our clients are showing signs of increased appetite for risk and expansion. People are looking forward to spaces opening back up and hoping that businesses will be going back to normal. We have seen that Colorado has actually recovered quicker than other states. We have a fantastic tech sector and a young, resilient workforce. We are continually on the best places to live, and populations are still drawn to the city, increasing growth even in adverse growth conditions. So retail's pain is industrial's gain right now. We saw 500,000 square feet become vacant in Q4 for retail, while industrial space continued to be strong with positive numbers. So what we're looking at here is that opportunity will strike in 2021 since recovery from the pandemic is well on its way. And now is a great time to invest locally in Colorado in the commercial sector.
You sound pretty optimistic, sound pretty positive. I love it. The glass is half full. I'm certainly hoping the year ahead is as positive as you're saying, and I'm hoping as well. Nick, the Federal Reserve has signaled its commitment to keep interest rates lower for the foreseeable future. So the overall cost of money is going to be cheaper. Why is that a good thing for Colorado? Is it a good thing for Colorado?
It definitely is a good thing for Colorado. So when we have transactions, sales, and prices in commercial real estate, you have to price in risk and capital. So as capital gets lower from a cost standpoint, prices are able to rise along with more transactions happening. What that means, more business in Colorado.
I love it. More business, more jobs, and we want to grow our economy. So love to hear that. Now, with work from home and remote work being so popular and seemingly effective, Nick, as you mentioned before, millions of square feet of office space has become vacant in the last quarter. Does that mean that office space is going to be cheaper? If I'm a small business owner looking to lease or rent, am I going to be able to get better deals? What does that mean for me? And then based on that, with the commercial market and remote from home being what it is today, with apartments and condos kind of evolving to better meet the needs of their residents, do you think that they're going to become more compatible for work from where you live, and thus could cause some issues for the commercial market?
Well, so what we're seeing here is that the office market, yes, it lost 1 million square feet in this last quarter, and it became vacant. So what we're seeing here is, yes, there are prices that are receding, which means, yes, you're going to be able to buy more office space, lease more office space for that same dollar. When people are coming into the office space to work, they want more square footage with what has happened in the past year. But what we have also found is that the workforce is very resilient from working from home, and they're still productive. So what we will see is we will see a little bit of a reduction in rates, a little bit of a reduction in prices for the office sector in the time being. But going forward, we think this is going to be a speed bump. And at the end of the day, people will still need their office spaces for their businesses. When it comes to multifamily, people working from home, we will see that they're going to be renting maybe an extra bedroom or two because they need an office inside their apartment. What that means for the investors that own multifamily is they shouldn't be changing really the layout. They just might want to allocate more 3 bedrooms, more 2 bedrooms, so maybe some 4 bedrooms, because at the end of the day, people need more space in where they're renting.
Great. Now I just want to jump in there and just say, I know a lot of people will probably have that question who are small business owners who are looking at, maybe getting some office space for their needs and whether it's going to be cheaper or about the same or better. So thanks for providing that perspective. Lastly, Nick, let's pivot to the Gallagher Amendment, which was recently changed by vote of the people of Colorado this past November. What do you expect the impact of this change to be on both residential homeowners as well as commercial property owners?
Great question, Ryan. So let's first go back. It's 45% residential revenue and 55% non-residential revenue for those property taxes. That was the Gallagher Amendment. So what we're seeing here is now we can break that, and it can be independently taxed from market value. In the past, we've had the residential market outpace the growth of the commercial market, therefore reducing residential tax rates every so often, every 2 years or so. And so right now, what we're seeing is that we expect residential tax rates to stay in line with market value instead of continuing to lower because of this 55-45 ratio, and commercial tax rates to stay approximately the same or again, stay with their market value. Why we look at this positively is that when there was this balance of commercial to residential in rural communities, it would be constricting the budget for that local area when it comes to real estate taxes. So we're excited to see that this constriction is going to be broken, and we will have even tax revenue from market value from both residential and commercial.
Great to hear, Nick. Now, viewers, by the way, who are interested in taking a deeper dive into your fourth quarter market report can find that report at madisoncommercial.com, right?
Correct. Thank you, Ryan.
You got it. Great. Nick Jurgens, managing partner with Madison Commercial Properties. Thank you for coming on the Business Brief. We wish you guys success in the months and years ahead.
Thank you, Ryan. Take care.